The trend is not your friend. You make big money when you can spot one trend dying down and another trend beginning. So if you're continuously following the trend, you will always be late into the party. And in this video, I am going to show you a simple way to identify the end of a trend and the beginning of a new trend so that you can position yourself as the new trend is forming. If you're new to the channel, subscribe. Let's do this. Alright, so how exactly do we identify the end of a trend on a weekly template? Alright, it's very simple. Now, Monday will always set the high and the low of the week. The reason behind this is because the days of the week are Monday, Tuesday, Wednesday, Thursday, and Friday. And since you don't have Tuesday, Wednesday, Thursday, and Friday, you only have Monday. So the only price action throughout that week on Monday is on Monday. And so Monday sets the high and the low of the week. Now, on Monday, you have not traded because, remember, we are not looking to trade just any move. We want first there to be a trend. Then we want to see that trend stop so that we can get in the reversal. So how do we do this? Monday, once it sets the high and the low of the week. So all you are focused now on is the close of the days. So Monday sets the high and the low of the week like that, and then closes like that. Then you come to the screen on Tuesday. Your intention is not to trade. Your intention is to just observe the market. What happens on Tuesday? Now on Tuesday, price can break out, which is okay, meaning we are still in an uptrend. However, the close of Tuesday will determine whether the trend is over or the trend will continue. And this is what you look out for. So on Tuesday, if the day closes above the high, then that means there is a very high probability that this trend will still continue going up. And remember, we are interested in trading the reversal. And so what do we look for in order to know that now the reversal is imminent? It's when on Tuesday breaks out but closes back inside of the high and the low of the week. And so this is how it would look like if you are observing the daily candles. So Monday sets the high and the low of the week like that. Then Tuesday, now this is what we are looking for. Tuesday breaks out. So at some point, this candle here, at some point, this pin was looking like this candle. So it was a breakout. But once the day closes, you see that actually the day closes back inside of the range. And so this looks like a liquidity sweep at the high of the week. And so this is now the reversal signal that we call a failed breakout, which is essentially just a liquidity sweep at the high of the week on the daily time frame, so that the next day we look for an opportunity to continue in that direction back to the low of the week. So let's look at a real life example. Aussie dollar yesterday gave us a very beautiful buy setup. So how did we arrive to this buy setup? First things first, we identify the high and the low of the week. Now, the low of the week was actually set on Wednesday, and then now on Monday, price broke below that low of the previous week and closed back inside of the range. So that is a buy signal for the next day. Now, if we already know what is going to happen the next day, how do we prepare ourselves on that trading day so that we can catch the most high quality setup? And so when you come to the screen, we have specific timing windows where we have the highest probability to get high quality setups. And for Asia, the timing window is between 9 and 11 p.m. New York time. For London, it's between 3 and 5 a.m. New York time. And for New York, it's between 9 and 11 a.m. New York time. Yesterday, we were looking to buy in the New York session. And so what do we see? We identify the high of the day and the low of the day. And we also identify our timing window. Our timing window is at 9. Next step is we identify the levels where price is consolidating. And so if we look at this downtrend, price was just creating lower lows until it reached this level here where price started going sideways. All right, now we see price going sideways. In our head, we are thinking there are only two things that could happen here. Price can break out to the upside and give us our buy signal, or price can break out of that consolidation to the downside and continue with the trend, which means we don't get our setup. So yesterday at 9, price closes above that consolidation as a breakout. So that candle is your entry, stop loss below that low, and you are targeting the high of the day. Simple. Now, the same thing happened on USD CAD, but now we were selling. So when we came to the screen in the London session, we had this uptrend, and then we had this little level here where price was consolidating, and then price broke below that level. We actually got into this trade first in the London session. We got stopped out, and then later in the New York session, when we come at 9, we saw that we also had this uptrend, and then we had this area here where price was consolidating, and we can see clearly a head and shoulders pattern. And so the moment price broke out, that was our entry, stop loss above that level, targeting the low of the day. And so this is why I say the trend is not your friend. If you want to learn more about this strategy, check out one-on-one mentorship. Link will be in the description. Book your call now. We shall get in touch with you. And if you got value from today's video, subscribe, and I will see you in the next video. Peace out.